Payment Genes presents Voices in Payments, expert insights for a digital payments world.
Welcome to our podcast. Today we have Geert from Oper. Geert, would you like to do a short introduction about yourself and Oper?
Sure. I am Geert Van Kerckhoven. I'm co-founder and CEO of Oper. What do we do with Oper? We basically have a white-labeled SaaS solution to help banks to digitize their mortgage process. So mortgage origination from contact to contract. And we do that in continental Europe today in 6 markets with roughly 20 lenders.
Nice. I remember when doing the mortgages myself as an entrepreneur. Horrible process. Almost stopped doing it, but in the end, it worked for me. But I can imagine a lot of people feel this pain point. Can you maybe share with us why did you start there? Maybe start with your background a little bit.
I come from the technology and the banking side. Now I've also done 2 mortgages in my life, and I really empathize that it is a very big decision, and not every decision is the same. So it's a very tough thing to go through and very complex. But actually, my career started 50 years ago. I joined a startup, and they built actually core infrastructure for lending. And back in the days, I just wanted to join a startup. So I thought it was, personally, I really love building, so I thought it was exciting. I had no clue what I was going into. And basically, they had a first client, they had a PowerPoint, a pitch deck, and a Word document. And it was like, now we're going to build it.
Interesting. More as an entrepreneur, about setting your own company. What is the biggest learning that you had in the last 5 years?
To be honest, I mean, maybe my most important learning is that I think I found my true passion. And I think a second thing that I really tried to explain to earlier founders, and you also alluded to it with Payment Genes earlier, is how crucial talent is. And that is something that as an entrepreneur, everybody tells you, be very picky in the people you work with. Really take your time to find people that click, cultural fit. And you hear that in every book, every podcast, every founder talk. And still you violate the rule every week because you want to go fast, because you're hungry, because you're a natural optimist, and you're like, Bram is nice, but I have a few caveats. And if you have a caveat, if there's doubt, there is no doubt. But that's a very hard thing, because I don't know if you also have that experience, but that's my key learning.
Amen, I would say. Yeah. And I can imagine you need that passion as well. Yeah, if you want to change or drive change within banks and financial institutions, which are, I think you need a long breath in order to really change that. Can you describe the current landscape of mortgages digitalization? Yeah,
so if you look at the current mortgage industry, and I'll focus on Europe to keep it easy, today, still a lot of the mortgages, it's a very paper-based process today. So if you see across the large markets, today, the majority of the, let's say, origination journey or the sales journey or the starts in a branch or starts at an intermediary, depending on which market, at a broker. And then there's a really large paper trail that moves up to the underwriting decision. What you've seen post-financial crisis is that, and also through a lot of regulations came to protect the market, to protect the client. And if you see how that has been solved, well, a lot of red tape has been stuck to it. So you just see that actually the paper trail has only increased. And that actually there, I think that was maybe a good thing coming out of the pandemic. At a certain point in time, the paper trail, in a lockdown scenario, paper trails became very, very tricky. So we've seen that around e-signatures, around automated KYC, around, let's say, open finance and open payments. Like solutions have popped up, also property appraisals, to make sure that you can digitally know, is the apartment really worth 300,000-400,000 euros? I think there we have seen the last 2 to 3 years, adoption. The only thing what we learn now that's a challenge in the industry is that we go to a bank, and a bank says, we have electronic property valuations with service A. We have an open banking API, but we're only using this for 5% of our production. And it's all on the side of our systems because we have a mainframe that runs in branches. And so today, I think a key challenge is there is a lot of nice innovations around, but it's a patchwork and it's not connected.
Yeah. So can I phrase it? Am I phrasing it correctly if you say that technology in the pandemic and technology have helped increasing awareness of the possibilities, but also now limiting the potential use of it because of certain complexities within the technology, because of the different technologies that are not collaborating or both?
100%. I think it's more of a lot of banks are in the transformation of, let's say, transforming their core. It can be core banking systems, can be their core sales systems. And I think those innovations will only really bring a return on investment when they are interconnected.
Talking about AI, how do you think, or how already it has shaped the mortgage industry, specifically on the automation and loan approvals?
I'm honestly quite excited. Why? Especially 5-6 years ago, I was already working in a different profession on automated credit scoring, automated loan approvals using machine learning. The only tricky thing with machine learning was that you needed to train it on your existing data, and then you came into then you need to come to discussion: where are we getting the data? We need to get it out of an old mainframe system. It needs to be cleaned up, and before you've done all of that, basically the project would be gone. That you would have spent millions. So there was already on machine learning a lot of possibilities, and I think we have some good use cases there. I think now with the foundation models, with let's say Gen AI and LLMs, what LLMs are inherently good at is predicting words and interpreting text. And if you look at a mortgage process, it is one text-based problem statement. I mean, we are verifying you apply for a loan, we need 50 data points from you. You'll probably give them to us, but then you also give between 20 to, in some countries, 50 to 60 PDF documents, scans, to verify if everything you said is actually true. That's a lot of text, and I think foundation models are inherently good if you put the right prompts on top of them, you ask the right questions, are inherently good in supporting that process.
And that's kind of looking at specific parts of AI. AI is a kind of a general term, obviously, but that's for the upcoming years. And as you say, we still need to train those models in order to be really productive and really reliable. What has been the biggest contribution of AI, or hasn't there been any so far that we can really say that?
You mean in general in the industry, or
in the mortgage industry? Yeah.
I think today especially on credit scoring, I think that's where it's used the most. Is you get the clean data in, and you basically say, should we underwrite or should we approve this, yes or no? I think there we've seen the best use cases. On the other hand, I also think the business rules engines there are also working. So it's more of a complementary service for when you have, let's say, more edge cases. But I think there I've seen in the mortgage industry the best use case today.
And while thinking about all this efficiency gains and the accuracy, I think what the kind of the impact is for the consumer or for the customer.
I think the easiest one that we use is that we want to get to 81% faster mortgage decisions. That's what it's all about. It's about certainty. It's about you seeing a property, especially in heated house markets. You're seeing a property and knowing, can we do it? And can we do this? And of course, why doesn't a bank give you a black or white answer? That's because the normally your situation is always nuanced. If you're an entrepreneur, you're solving. There are always edge cases. So we're saying for 100% of the cases, we want to get 80% or 81% faster to a mortgage decision, because that saves time for you as a borrower, saves time for your loan advisor, and saves time ultimately for people in the back office doing the stare and compare.
And also creating more transparency maybe along the way?
Yeah, that's on the product decisioning, absolutely. But yeah, transparency, I think transparency in giving you certainty that you can do it, absolutely. Transparency on what is the exact risk policy is something that, it's not always that easy to share directly with a client.
You already mentioned open banking in the mortgage industry. Open banking is not something that is here for already a couple of years. Can you explain a little bit how that has impacted the mortgage industry so far?
So for us, what we like about open banking is the fact that we can have access to bank account. That access to accounts, I think, is key. Why? Because most of the time, your salary is deposited on a bank account. And instead of checking 5 documents or even getting a PDF of your account statements, which I think is crazy, I mean, open banking gives us a lot of data of, what is the credit worthiness of a client. Secondly to that, especially in the DACH region here in Europe, you still have to submit something called a household account. So it's much more detailed than we know it here in Benelux, where you basically need to say, hey, we give so much money to utilities, we give so much money to a car, it's really a detailed statement of what is the family spending money on, which today in some Austrian banks is still filled out paper pen. There, for an Austrian bank today, we use open banking. So if you're a client of the bank and you have the primary account there, we just basically load it in, we do the mapping, and basically we get a real overview. Because again, if you're filling it out in paper, you might be a bit more optimistic if you're really excited about that apartment in Vienna.
And what do we need to overcome these challenges?
I think adoption. Also from our tests, sometimes, we have because we have a borrower facing side in our product as well. So borrowers can also directly interact, using our technology with the bank. So first and for all, sometimes clients or borrowers don't want to connect their bank account. That's if you're a client of the bank, it's fine. Like an ING client will always do it. But if you are going to ING and you are with another bank, you think, I'm not going to keep that. So I'll rather upload documents. That's one. And secondly, I think is adoption, because adoption will drive the fact that we get cleaner APIs, we get better classifications, because there still in some countries, we connect to the access to accounts gateway. We try to see if we find income, and then we don't find income. And again, if we don't find a clean income, we cannot use it in the loan application, and we're going to go back to salary slips. I think why, for example, in the UK is quite common. In the UK is really advanced on that. But again, they had a very good implementation of PSD2. Open banking was really pushed forward. You then also, the vendors in that space could connect to cleaner APIs. Banks start using it, so you get more traffic. You get also more complaints if it doesn't clean. And it's a flywheel, right? And I feel on this side of the river, of this side of the sea, we're not that far yet.
So it also has to do then with consumer expectations. You say in the UK it's almost integrated in the consumer expectation as it is. You will be unhappy if it doesn't work. So how are borrowers' expectations changing now, and also in the rest of Europe when it comes to mortgage and payment processing?
I think they all start these days. You mostly start online. Why? Because you also start looking for a property online. But what I've seen happening in the last 1.5 years is that actually you want to start online, you want to play around, but then you want to speak to somebody as soon as possible, because a lot of mortgage cases there's always a little bit of in Dutch we say there's a bit of a corner to it, special corner to it. I think it's something Flemish. And so there's always a specificity about the case. And so that actually today borrowers expect good advice. And that today is, I think, very, very tricky, is to talk to somebody that is really knowledgeable. He can talk you through your project. I had a workshop with a bank yesterday about this that also said, during the interest rates that went up, they had so little volume that they reduced their mortgage advisor capacity. Now interest rates are going down again, so volumes are going up. And they say, actually, we don't have advisors anymore. So we're really struggling to give good advice. So this whole paradigm of a client is going to do everything online when they buy a property for the first and the second time, I don't think that's a valid assumption anymore. So meaning that borrowers expect to speak to somebody, and then they got good advice, then things should move fast and digital again.
So we've discussed open banking, we've discussed the role of AI, if another term, Fintech, financial technology, and upcoming potential possibilities within the Fintech market. How would you think can that cross over with the mortgage industry, and how can it benefit? How can it increase? Are there kind of solutions that you feel like outside of AI, outside of the potential with open banking, that can increase the customer experience?
Yeah, what I think is something that I've been very optimistic about for already a few years. This is something you hear on every big conference if a banker comes up, but they're always like, a borrower wants to buy a house. They don't want a mortgage. So like the killer statement, right? But today, where in Europe do we have an integrated experience?
I cannot name any.
Exactly. In that 5-star experience that I said earlier when we started Oper, we actually said like, look, I'm browsing apartments in Amsterdam. Technology-wise, I want to know, this apartment is affordable to me. This is not affordable. By the way, I still have a studio somewhere in Utrecht, which I might be able to sell. What's it worth? How does it go into my... So this full, I don't want to do buzzword bingo, but this embedded experience, I think it's a no-brainer, but it doesn't exist. And I think that can really create a different borrower experience. But today it is really, there are really Chinese walls between, let's say, the PropTech world, because it's more PropTech, and the financing, which, by the way, in payments, if you look at e-commerce, it is fully integrated. Also, buy now, pay later. There you have this very nice, let's say, embedding, but in the mortgage industry, it's far gone. And there I see a lot of potential.
To be a leader who starts approaching those PropTech firms, right, and kind of make the transition happening. So you need to kind of look for connecting industries to drive change.
Yeah, correct. Exactly. And I think everybody on the real estate side wants to go into that direction. But what I learned as well, but I mean, maybe listeners can also build the changes here, but I mean, is that PropTech people don't understand that much of financing. So it's two different worlds, and bringing those worlds together is always very challenging. I mean, always there's something that, how is the remuneration model? How is it going to work? What does the regulator allow? And then often there it halts, and it gets back into a very simple lead model where I bring you a lead and then the bank takes over.
One of the topics that we haven't touched about is more kind of the regulatory part, compliance, and security. What are the challenges and how are they overcoming? Yeah.
It starts with the European laws and regulations around, how do we, for example, are we doing digital advice for a client? Is that in line with the European and the local regulations around advisory? I mean, that's the typical EBA, European Banking Authority guidelines that we need to follow. So I think there, I said, we built a lot of materials around it. We're also cloud-based. So again, we can leverage what the cloud providers have. But again, we also need to see, that's typical enterprise SaaS. Of course, now with the EU AI Data Act, where you have these, high risk, low risk classification.
Mm-hmm.
They literally said that loan approvals, so fully automated loan approvals using AI are high risk and need to go through a conformity assessment. So now we are really thinking about how do we make sure that we do not get into that category, because a conformity assessment is going to take 2 to 3 years to get approved, and banks are not willing to implement that. So I feel that it's like becoming a separate capability within our company to bring that assurance to clients, to bring that assurance to banks, to make sure look, we figured this out. We're doing this fully in line with regulators, because otherwise they will never implement our technologies. So that's, I think, a key challenge that we see today.
And then you create kind of because if it gets the high risk stamp, banks, you mentioned bank do not want to, or not really eager to integrate it.
Well, the thing is, then you get a bit into the innovation trap, right? You come to a bank, you say, hey, look at this can save you X amount of costs, or you can be much more efficient like this. And they're like, by the way, we need to go through a conformity assessment. It's going to take 3 years. The process is not well described. Then I think, I've been in this industry now for 15 years. Then I know what's going to happen. We're going to be like, it's very nice. See you in 5 years. So for us, it's really about, I think we're very focused on de-risking. And that's also what we did with our full AI roadmap. So we've pre-vetted this with specialists, regulatory experts, lawyers on top of that, so that today the functionalities that we have in the product, we can basically go to the compliance department of a lender, of a bank, and just say, look, this and this and this and this, all ticked off. This is approved in line with regulations, not high risk, human is in the loop, etc., so that we can bring that innovation quicker to them. So it's actually, we productize it in a sense.
Our audience is also more related to payments and fintech. Is there more, in the future, more collaboration or synergy between mortgages and payment solutions, you think?
Yeah, I think for me it's, a third trend, but it has started. And for me, it just needs to start maturing is data sources. And for me, payment providers are still really, really good providers of data. Mm-hmm. Data which is very valuable into a loan application, etc. I think payment providers today know if people pay back things regularly. Also, payout schemes, by the way, for mortgages in when you go for a renovation project is something that is today also it's a medieval process actually.
And how do you get them to help or facilitate opening up that data for companies like yourself or the banks?
How do we get them there? I think it's about that's really about synergies and collaboration. I think some of them have already very good established relationships in banks, but then I think it is more about showing those use cases to the banks, and they're mostly sitting on clean APIs. So actually, very quickly you can show something that's extremely valuable.
So there's a lot to be won there.
Absolutely.
Yeah.
I think on a macro level, I think we will be, I mean, we've seen interest rates went up to fight inflation. The expectation was to cool off housing markets. Let's say in the areas that people really want to live, like where we're sitting now today, that doesn't happen. So for me, I see a huge risk on affordability. But the problem is affordability is going to be more hard, but it's going to be more tough for borrowers to borrow. And banks are going to find solutions for that. And maybe the government will come with subsidy schemes, etc. So for me, what that will lead to is actually that we will not be able to, it will prevent us from going to full online mortgages. You just do it very quickly on your phone. It will actually lead to you talking to a broker or a loan advisor much more quicker, because we can't figure out how we will structure it. More complex products, difficult affordability. So I think I actually see a renaissance moment for the loan advisor. All the banks have been shutting down branches. So your typical around the corner loan advisor doesn't sit there anymore. But we're going to have to find digital solutions. We're going to have to find very nice ways of interacting with humans and basically getting through that process. I think that's where I see a huge area. My prediction is that the banks that figure out tooling for that, virtual advice, partially digital advice, I think they'll win in the market. And then we also have the whole green financing, renovation, etc. part, which I think will also lead to that. Yeah, and what I hope is that we will also start seeing the first real embedded experience, because I do feel there is things that are going to happen to really, have an integrated property buying experience, which again, in a more complex housing market, might make a lot of sense as well.
Thank you. I think it's good to have a few takeaways of this conversation. That reading the different data sources and making decisions based on that can really impact the business significantly. However, the road towards that is quite long and lengthy. Models need to be trained, regulations need to be overcome, or they are becoming more challenging. The payment industry, the payment service providers can provide a significant impact by providing clean data sources. But in order to really create a more, as you call it, embedded experiences for consumers, there are multiple industries that need to collaborate, like the PropTech industry. And so far, I think the biggest game changer has been open banking, which made it possible to at least digitalize some of the mortgage industry. Where we are today is still that there are too much providers, too much technologies that are not connecting well with each other, by only using the potential 5%.
I think that's fully correct. And I think also the mortgage industry can learn from the payment industry.
Yeah.
But mortgage industry is always the one that comes last, I have the feeling, when it comes to digitalization. So also a payment happens almost instant, and a mortgage takes 20 years.
If I talk with people about mortgages, people look a bit, really look at is it painful? Right? And what do you like so much about this mortgage industry?
I think I became a domain. I learned, although I learned that Warren Buffett doesn't agree with me, so I don't know if you want to go for believability, if you need to believe me. But I think I rolled into it because I was a domain expert, let's be honest. And I hated my own experience, and I felt we could do it better. But secondly, is that something I learned over time is actually that a mortgage has some societal value. Because actually people, the first thing they always pay back is their mortgage. Hopefully, property prices rise. So in the end, you're creating wealth. So you're saving money. Unless you're in the Netherlands with the interest-only loans, but anywhere else, you're paying back for your loan. So you're creating home equity. And this can be a retirement. And I think that is something that has a lot of societal value. And actually, like working also with more regional banks that really have a regional responsibility, I started really thinking this is actually a very meaningful problem, of a very meaningful product for households to create household wealth. And it's not only about having a roof above your head, but it's also about, in the end of the day, having something saved up, which you don't have if you rent the rest of your life.
Well, correct. Thank you.
My pleasure. Thank you for having me.
Voices in Payments, expert insights for a digital payments world.